Hello. Good afternoon. Welcome to another ES Futures trading video. Today is Thursday, July 13th. I usually do, if I ever do homework, I usually do it, if I do a stream on homework, I usually do it before the start of the session, which will be tomorrow. But I decided to do something today, just to show you how you can do your homework, how relevant is to analyze what happened in the market today. What can we expect for the end of the week? But let me disable this. I don't want to hit anything by accident. All right. First things first. Overnight inventory today. Overnight inventory was 100% low. Okay. Overnight inventory. If you have seen, you have seen the previous videos. We have two streams today. You have seen what the inventory was, how the inventory was, right? What the situation of the market, what potential, what the scenario was. Right? And what I'm going to do here, I'm going to do my homework. It is 5:34 p.m. Eastern time. Okay. To begin, I'm going to separate yesterday from today. Okay. Here, okay. The market, please. This is just everybody can narrate the market, right? If after that happens, you can tell what happens. Okay. The market open with a gap, with an upside gap, with a gap or with a gap to the upside. Gap was close. Gap was close. Was pretty quick. Rather quickly. Okay, that's the first thing that happened today. Quickly, but failed quickly. It did not have downside continuation. Okay. Remember, overnight inventory was 100% low. Buying or selling just disappeared as soon as this market took this, closed the gap. Buying disappeared here. Selling, just market just dry there. Okay. Let's see if I can make this smaller so you can see why I'm right here. Notice how the market here, all right? Notice how the market left here. 1, 2, 3, 4 lows, cluster lows here. If the market value was high, as soon as the market closes this upside gap, okay, we start to monitor value. Value never even re-entered yesterday's range, okay. So if you by any chance you have a short here somewhere up here or whatever, okay, this is telling you, okay, the risk of being short is super high. Okay, the long is not better. The long is not better, but the risk is being short super high because value is higher. You trade in the direction value. Okay, I didn't see nothing here. Okay, now also when we have this kind of lows here, notice how the market was bought here at this level. This is half back now, the range. If you have high here, low here. The center is this orange line here. This was held back at the time. The market was bought exactly to the tick on held back. This is no good, okay? So when the market did this, the last thing I don't want to be long in this market. After that, market make another double loss here. It keep doing new highs. Weak high here. Good also the market, it could be from here, it could have a big break, but it have upside continuation. And notice how, you know, traders just keep doing the same thing that we're doing down here, down here, down here, keep doing the same thing. Again, buying at pretty much the center of the previous period here. But there is some liquidation that happened in the last period. We have an excess here now. This is not a spike, okay? This is not a spike. This is way much different. So why it's not a spike, and why I say this is a spike? Why this is a spike, and this one is not? Okay, why? What's the difference between this one, and this high, this single prints here, okay, and this single prints up here? The difference is that the market closed inside the spike here, way up high, and the market closed pretty much at the center, not at the center, but yeah, at the low of this distribution. It make a distribution. It closed at half back here. Okay, it closed at half back. That's the difference here between those 2 days. Okay, remember, context is everything. That's the first thing we are seeing from the charts. Okay, market there's no spike here. Value was higher throughout all day long. It's just an observation here. Mechanical buying continues. I'm going to name this as a $713 high, $713 low, $713 low here, right? What the heck is this? Oh, this is high volume area here, from 30.50 to 29.50. High volume area. Why I call this high volume area? Because this is an incredible accumulation of volume that happened in the opening. Look at this volume here in this period. This is really high volume here. It didn't. The rest of the day we never have this kind of volume again. You know, there was just there's buying here. The market was being held up. Notice how these lows are very close to each other. This one, it dries, no? It dries here. It can. I would like something like this better. Okay, can you see how the taper happens here? The lower it goes, the volume goes reduced here. It didn't happen that way. It just dry. There's no selling here, but not in this way. I don't like this. I don't like this. This is better to me. All right, but this by itself is one thing, but together with these two, that's another thing. I don't like this at all. You know, you can see high volume here at the low. This one is even worse here, much less this. All right. Not this one. This one is better. From all of these histograms, the one that's better on the lower side is this one. But notice how volume happens. It's accumulated here at the low side. this part here. Okay, this could be if you are long here. You remember how this market was very slow today, as the tempo was terrible, it was grinding its way. It was just painful to watch this market going higher. Painful to watch. Notice the congestion all day long, okay? And we have some volume here going to the downside. Look at this. After the close, there is nothing here. No volume here. No big blocks here. I can expect something here during regular trading hours before the close, at the closing, but after the close, not like we had yesterday, for example, right? Now, the odds that this could have some rebalancing here are higher than than today, for example, right? A day coming from yesterday, when we have higher volume here, that volume is over here. It is not. Now, the difference between the accumulation of higher volume here, notice this, okay? This is high volume here, okay? High volume, but no block. I don't see any kind of big volume here, big blocks here, okay? Notice what happened yesterday. I hope I can find it here. There was some big volume blocks here, a lot of volume here, okay? I cannot see here, god damn it. Let's see. This is yesterday. Notice the amount of volume, okay? After the market closed, gigantic numbers here. Now, over here you have 10, 9, 11 or 12,000 contracts here. But big blocks, big blocks here. I guess I hope I didn't check this one, but when I check these ones, this is one purchase, okay, one transaction worth 3,300 contracts. And that's usually, right? Not necessarily it's like that all the time. Big volume here, a lot of volume here as well. Big volume here. Can you see these ones? Yeah. We do not have these ones today. Okay. We have, notice how there is no volume here, okay? No volume in the period, okay? No volume in the period, but big blocks here. Can you see the difference? The volume can be lower, but there is a big buyer there, or seller, or whatever. Okay. I say it's buyer because otherwise, if this was selling, the market would be way below. That didn't happen today. It didn't happen today. It happened. The opposite thing happened. We have volume, but no blocks here. No taper. Okay, but this is history now. This, if you are holding a short here somewhere, this is telling you, okay, you got to be out here. You got to be out, waiting or expecting or praying the market is going to come back down here. It's just, praying is not a good strategy. Okay. Mechanical buying continues. All right, I'm going to take a screenshot. I'm going to take a screenshot of today's. Before I do that, okay, let's take a screenshot here. Here's a big one. Just a second. I am doing some adjustments here. All right. All right. Oops. Okay. I'm going to highlight this. I am very interested in this level here for the upcoming, for maybe for tomorrow or even for the overnight. This could be a level where the market can have some activity. After this volume, notice nobody else here. There's something that happened here. Notice there's a lot of congestion and nothing here. What else can be of relevance? Nothing here, just dry. It has excess at the high. Okay. Just copy and paste here. I'm going to take another bigger screenshot so I can see if by any chance I have to come back and check something. I will just have an idea. Again, this is what I'm looking at. Small volume here, not significant, something here. It's just expected. I don't like this. I don't like this. These are very questionable. No, instead of doing that, instead of highlighting only this one, this is what I got 1, 2, 3, 4 lows here, plus the lack of taper, and this one as well. Now this was bought a halfback here. At the time it was halfback. This is very important. Notice how it has another super mechanical here. This is very risky here. The long is super risky now. It doesn't mean the market cannot go higher. I'm not saying that. I'm saying the risk, because risk is everything in this business. Risk to the upside is high. Now I have it here. Next thing I want to check. Let me check how the other markets are doing. What the other markets are doing here. Really nice, you know. Bonds are recovering. Dollar is falling. Crude oil is, and you know, this is a tale of two markets here. You got bonds, dollar, and crude positive, and gold as well. Wow, these two has to be wrong. One of those has to be wrong. All right. Bonds are backing. What happened with bonds? Bonds are back. Inside. Strange. Both markets. Okay. Look at this. This is the range that I'm talking about. This is the range I'm talking about. The market has come back. Some liquidation here and that's coming back here. What happened here? What may happen here may happen another. The next thing the market could do is actually target this high. It's target this high now. We're coming all the way down here and having an upside extension. Always have to monitor that. And this will be headwinds for the market. Okay, crude dollar, crude rising, breaking out the range. I mean, look at this. Look at what happened with crude oil. This is actually a range here. has come back, has visited these lows, and now took this range out, come back to this range, and now it's having upside extension. This same behavior can happen here as well. The dollar, quite the opposite thing happened with dollar. Well, you have this low the range, market took this low and it's having downside extension here. Well, that's not back in September, rising, come breaking out, coming with upside extension from a breakout. And what else here? Gold. What happened with gold? Back. Next thing, what else can we do here? Volume. What happened with volume today? Oh, volume is lower. Consistently lower than yesterday. Let's take a screenshot of this one as well to add to the homework. Volume is lower, volume is lower. Relative to yesterday. And higher prices are not attracting more activity. That could be the first sign that the upside movement. You know, that volume will measure the failure or success of the movement. What else here? Now we talk about no big volume blocks after the close, right? Here, no big volumes, no big blocks after the close. No big volumes, no big volume blocks after the closing before the end of the day. Okay, I think that covers this part. Notice this. Oh, here. Okay, let's check now. Let's check. Friday. I am streaming! What? I'm doing a stream here. Please be quiet. Talking to my son, to my daughters upstairs. Friday, July 14. They have a pet dog. And they just behave like the pet. They don't pay attention to what I say. All right. Okay, let's take a screenshot of the market, or time frames, or what's happening with the bigger time frames. Okay, I guess that's too. Let's take another one. Let's do it once more. All right, right there. Okay, notice the gaps, gaps here, gap, one gap here, significant gap, breakout to the upside, breakout to the upside, breakout to the upside. I like to do this now. I used to do only one at a time, but I have noticed that it's better. It helps to have them all together as well. Whatever things works, you have to keep innovating, right? All right, I don't like you. Breakout continues, right? This is the monthly time frame. Monthly. What monthly says? Monthly clean breakout is upside breakout, upside breakout, breakout is having upside continuation. That's happen. How is doing it? Doesn't matter here yet. Upside continuation. Okay, again, upper references are also central numbers. This market is very elongated to the upside. You can see it here. One time frame higher, one time frame higher for third month. 3 months is the market is going higher. Okay. Now let's take a screenshot of the weekly. You will see something really interesting here. This is the weekly. This is the weekly time frame. Weekly time frame. Now notice what we have here. This is has take this mechanical. If you grab your no, this is the weekly time frame. Now this is 4500 here. 4600 is the next reference in the upper side. Okay. Breakout. This is an upside breakout. The daily. My bad. Weekly. This is the weekly. Yeah. I have weekly time frame. Weekly, one time frame higher, one time frame higher for third week. Third week, one time frame higher for third week here. Non-access here, questionable law. I guess the most important thing here as well, the market has breakout, has breakout. As this is, I don't know if this is how it's written, has to be broke out. Suggestions? I don't know. A breakout, right? A breakout. What the heck? Breakout of a 4-week range monitor for continuation. This is very important. If the market falls back inside previous range, back inside range, if the opposite side becomes the estimation trade here, which is this side here, 43.27. Yes, actually down here is 43.50. Okay, this is the lowest side of the range, but if the market comes down here, you may have a gap here to fill, which I don't consider this being a gap because it's the contract rollover here. Anyways, who cares about that? The daily, now, I see something else here. What I am doing in the daily, I'm taking two screenshots actually to see one the bigger one, to see the reference. The curious thing here is that the references are all the same for all time frames here. All time frames have the same reference to the upper side. This is something I question here. Okay, I'm questioning here. I questioned this for a while. The market having this shape here. And another one, a bigger one here. This is the stem of the P, this is the P, and this now it's having a breakout. Oh, come on. Oh, come on. Of this P here. It was truncated in the upper side, but now it's having extension to the upper side. Out of this range as well. Okay? Out of this range. This could be relevant in the future as well. Let's grab this thing as well. This is the daily. Daily. What's happening in the daily? Daily is one time frame higher. One time frame higher for how many days? 1, 2, 3, 4 days. One time frame higher with a significant gap at the center of the range. Okay, notice how this, what I call the range here, a new range here, this one and this one, high, low, market trending market, and you have a gap on the lower side. Now this will also have another gap here. Now this also will have another gap here. Notice also how there's another gap here. Notice how buy happened from the 50s. 1, 2, 3 buys from the same level. Another 50 here. 1, 2, 3, 4. Another 50 here. And there's multiple things here. You know, this is extremely risky. The pain trade. You will call it a pain trade going on here. Market, the structure of the market is weak. It's weak. You will see, if you pay attention to these outlets, new outlets, the pain, they are talking. There is a lot of talk about pain trade. Google that. What else can we take from an observation here? You know, the market is very elongated, very to the upside. To the upside. Everybody can see that, right? So everybody see this. So let's go long. Okay, long. That's a trade actually, you know? But we just put the things in context. Okay, today was a long. There was one long there, but it was very, very, very hard to take that one because it happened so fast. Daily. There's nothing else here. You know, tomorrow, banks start reporting earnings. Tesla, NFL, Netflix, next on deck. next week. Okay. Market profile. What the market profile has to say. All right. You have this volume. Are we going to keep this area here? Okay, this could be relevant. This could be very relevant here. I don't want the market to come back. If the market comes back and take this area here, there could be a big liquidation here. Okay, because there's a lot of volume here. And look at these lows here. Okay, mark this as, I'm going to mark this as a weak. This level is weak, this level is weak as well. Okay, this one as well, and this one as well, and this one too. Okay, but now the market is below. Right? What is, or where is settled now? Settle was hit before. This is this is very questionable here. This overnight inventory here, overnight lowest settle. I'm going to mark this as well. Why because I want to remember this, that there is long inventory here. This inventory here is long, as it's weak. It's very, very questionable here. Now tomorrow, today's 43.50 is the settle, or settle, I don't know, 43.50, 43.50, way up here. Okay, look where the market is now. Right now, it's negative. Last is 45.39.50 down here. Okay, last is here. Oh, look at that. Where the last one, where the last trade was. If the market is going to keep going to the upside, it's going to build. First, it's going to open inside this distribution here. Okay, closing this distribution targets the lower side of yesterday's. Okay, yesterday's range at the opening. If this opens, if tomorrow opens here, well, now the potential destination could be this side. But one step at a time. Don't get too excited here. All right, I'm going to keep this open. I want to screenshot this. I want to screenshot again twice here. One big one. Market has made a new high. This is good high. We have excess now. This is all regular trading hours high now. This is market high. This is very important. Okay. Now it was made in the regular trading hours. Higher prices were rejected at the closing. We have excess here. This is important. That can be something there. There can be something there. This is the market profile. Okay. This is one. And another one is going to be without these overnights. Without this overnight. Okay. Market make a new high in front of earnings. Just in front of earnings session. Earnings season, no session. God damn it. Okay. Well, the question here, again, the same thing. This comes from this one. Gap was closed here yesterday, a couple days ago. coming from value area low. Value area high. What? Value area low. Value area low. Value area low here. Okay. The most important gap was closed. Gap was closed. There's a gap here that was bought from this high, from the monthly high. This high here is the monthly high. And now we have excess on the upside. July has excess. It was bought from, what the heck is this? What the heck happened here? This was value area high here, and this was value area low. All right. I don't know why it made this. On top of that is there's something else here in the lower side. It's just, you know, I don't want, this is too far. I don't want to look too far below, right? No, but this is also very important. The base of this thing, whatever it is, the base of the breakout comes from halfback here. All right. Next thing, value area low, value area high, gap here. Yeah. Very mechanical trade here. Very mechanical trade here. Market profile. Profile. The trade. The market, the trade. The dominant force in the market has been the shortest time frame trades. Very fast in market leadership. It is the shortest one. Today, profile. What's happening with this profile here? The market is having upside. The market has two distributions. We have the market gave us the market profile has two. This is very technical what I am writing here. Just technical. It has two distributions. Has two distributions. I want to see. Now that's my focus. I want to see the market keeps these distributions tomorrow. You know, keeping the distribution keeps the market, keeps the momentum to the upside. Closing the distributions can trigger some rebalancing, especially because tomorrow is end of the week and some banks start reporting. But next week, some big tech companies are reporting, and you know, I think so. I suspect that some trading is going on based on expectation, basically. You know, very weak overnight. And what this means, the dominant force in the market has been the shortest time frame. This means that the market is very, but the market inventory is very long and in hand of the weakest. In hand of the weakest traders. in weak hands, okay? Momentum remains to the upside in all time frames. Long, being long has become very risky. However, remember this. However, shorting the market, even though you are right, shorting the market could be a risky position. And the momentum can take momentum. Don't fight momentum. This is something. Don't fight momentum. Do not step from the train. That's simple as that. Okay. There is some. This day in particular is terrible to me. Okay, this is terrible to me. I don't like this day at all. Daily hard back here, multiple lows, multiple references here. Okay, but the buying continues. Remember, we have the week after the next week, we have more earnings. We also have FOMC, CPE, and my focus now, my short-term focus is the ability of the market to keep the distributions, to build value, to keep the distributions filled. Remember, we are coming from a big gap here, this gap as well, a big gap here in the lower side. We have this overnight spike here. This high was made on news. Okay, when that happened, usually this retrace it also in news. But let's see. Market's too low to me, right? The market is too low. I have no plans to have any kind of trade here right now. Remain neutral, as usually here. Being long is risky. It's getting riskier and riskier the higher the market goes. It doesn't mean the market is going to break. Okay, it doesn't mean I'm going to be short. Also, the pain trade, if you pay attention to what the outlets, what I do is I watch MSNBC on TOS. Okay, TOS has this thing here. What is this? Come on. All right. Has this thing here. I know right now I have Jim Cramer. This is TOS 5 swing. It's free. Comes with software. It's good. You will see, I don't trade this. By the way, Jim is a momentum trader. he just had to, attracts too much hate. But he's actually good. I think he's a good momentum trader. The people just don't understand, right? There's some people that whatever he says, they just go against what he says. That's just ridiculous, right? You have no idea what you're doing if you do that. But I think he has some, it's a momentum trader. It's a momentum trader. Most of the people here are or were momentum traders. Okay, and you will hear here the pain trade. What happened to the pain trade is, I didn't know that, by the way. I have learned this lately. The pain trade is when, there's no reason for the market to keep going higher, right? The market is very weak here. You can see these time frames, right? Very weak. We are doing the homework very weak here. But The bigger time frame, everybody knows now. There's a lot of money that is parked, on the sidewalks here. They're underinvested. In the same way how we get cut short, if we can get liquidated or get cut short, we all have been squeezed sometime, right? You know how it feels being squeezed. When you have a short and then, god damn, the market will just go in the opposite direction. And you refuse to close your position because you were losing 100. And you don't wanna lose, you wanna lose only 50. And suddenly you are 300 under one. Okay? The bigger time frame go to the same things also, okay, or can go to the same thing. And what happens with them is when they are underinvested, when the market keeps going higher and higher and higher and doesn't correct, they will be evaluated. The way how it is the same here, and being underinvested it is the same that being cut short for us. Not kind of high. Sometimes this is hard to understand, hard to make up, not to wrap our mind around that. But that is what happens, and that is the pain trade. When these bigger companies with bigger investment money is caught by surprise, and the market, they were expecting something here to the downside to buy, and now the market is way up here again. Okay, they won't see. They don't sell. But the gains will be lower relative to other people, to other companies, and that's what they are measured. That is the pain trade. That can be, and that's a constant. Now is a fight between this trade here, or the shortest time frame, and the bigger time frame up here. Okay, who is going to prevail? No, have no idea. Okay. But knowing that can happen can be very, very, very useful. Okay. Right now, I guess that's all I have for the homework. For my homework, we don't have nothing on the deck for tomorrow. No big news, nothing like that. Maybe consumer sentiment at 10 a.m. But I guess the most important thing will be how the banks, how the yields. If the yields are lower, there could be some rebalancing here. If the bank start going yields supposed to going lower, tech can go lower as well. Okay, that's it. Unless you have any questions, I don't even know if there's somebody here, but I hope this helps. If anybody see this, you just can leave a comment or questions. This update, it is also posted in YouTube. I guess Twitch doesn't let you post on past streams, but just let me know. I wish you a good rest of the day. Stay safe. Have a good night.